Hello, and we have to talk about Bitcoin's best and worst cases for 2024. Now, this is based on a certain analytics from CryptoQuant, and we're going to comment on each one. So, the best case scenario, if the Bitcoin ETFs, which have amassed 192,000 Bitcoin as of Friday, if the buying pressure continues, we will reach about $112,000 according to CryptoQuant. And the worst case is at least 55,000. Now, I think the worst case, they kind of expect the buying pressure to at least somewhat taper off in a big way, which, there's definitely going to be some tapering off of value. It's not going to gain like $3 billion every month for like every ETF. These ETFs take a while, and obviously there's an explosion of volume at the beginning. And of course, the inflows have already started to slow down a little bit for the rest of the year. And we don't really know how many more big outflows there are, but it's pretty obvious that inflows are going to overtake outflows eventually. So, they're looking at 112,000 if the current trend of inflows related to spot exchange traded funds continues, and that's from on-chain data. Of course, how this works is like a lot of those places do buy OTC, and since they actually buy OTC, like what happens is like they just dry up the supply of OTC, and there will always be a supply of OTC. There's no time when OTC I think is like completely out of coins. But what happens is like it'll bring up the price of OTC, and OTC has to remain below spot price for it to actually function. So eventually, like the price of OTC will go up so much, and that will push the price of spot up. And since they're buying so much, that's going to happen in a big fashion. Now, eventually, like it will actually even out, and speculators will like short the ETF and stuff, and it's going to be a little bit like gold. And according to the massive inflows in the first month, like it's going to kind of like be a little bit slow and then like sudden up and then like flatten out again, just like gold, because there will be a lot of demand for this stuff, as has actually been seen. Of course, the targets were made based on effective inflows on Bitcoin's market capitalization, a metric ratio that has historically indicated if prices were overvalued or undervalued. I'm not really sure if like the overvalue undervalue thing is going to have that much of an effect. It's really just about the buying pressure of exchanges and how many people actually buy the ETFs. Judging by the first month's target and the first month's like ETF inflows, and historically, I think it's going to be like at the end of the year, it might be closer to 112,000 than 55,000. Like I'm looking at 70 or 80K, which lands right in between, but slightly favoring the 112,000. Of course, like when it'll actually get there is going to be a big question, because there's going to be dumps obviously in the middle of everything. And what I mean by dumps like in the middle of everything is like, when you have like a Genesis sell-off or these sudden sell-offs of a few $1 billion, because probably because of the FTX and Luna liquidations. We don't really know like if the Terra Luna Foundation still has a lot, or like FTX has funds elsewhere. SBF could be hiding them at places, or like Celsius, 3AC, Voyager and stuff. But that should easily be overcome with like just a couple of weeks of inflow, as has been shown after the FTX sell-off. So Bitcoin market has seen 9.5 billion in the spot ETF inflows per month. That's all of them combined, potentially boosting the realized cap by $114 billion yearly. Kia said, even with GBTC outflows, a 76 billion rise could elevate the realized cap from 451 billion to 526 to 565 billion. So that's actually not correct, because they're assuming $1 rise for every dollar inflow. That's not true. Once you actually get past the price resistance, it can go up many, many dollars for $1. So I think they're actually underselling it. But the thing is, like the outflows can actually do the same thing. It doesn't exactly cancel each other out, and it actually makes it even more bullish than this article sounds. But I don't think we'll be crossing 100,000 this year, but I do think we will be crossing our all-time high. So basically, like he cited a ratio tracking Bitcoin's market cap and realized capitalization, a measure of active tokens at their last traded price. And this is all on CryptoQuant and also on-chain if you really want to look at it. And he says marking a top for Bitcoin at the 104 to 112 mark. I don't think it's going to go that high, but it might actually reach that price. But I think like, this article is making it sound like $1 of inflow equals basically $1 of cap rise, which is not going to be right. If you actually have $114 billion of inflow per year, that's going to raise the cap by a lot more than 114, as you've actually seen with the Bitcoin cap recently. Because like recently in this month, despite the inflows have been 9 billion, but the Bitcoin market cap has risen by a lot more than 9 million. In those 9 billion of inflows, it's like 10 to 1 or even more. So it could potentially go a lot higher than even this particular article says. But I'm skeptical about producing higher prices because there's going to be a lot of sudden outflows that drop the market price, and we're going to have to take a couple of weeks every time to actually recover from those drops. But I do think 55K is going to be a bottom, more or less. And I definitely think that we will go higher than 55 to 59K, especially at these current rates of inflows. Like I said, if the Genesis thing doesn't actually come through in the next few weeks, we're definitely going above 50K. And next week, even though right now the risk factor for Bitcoin is fairly high, I'm still fairly bullish for next week. Although there is like a very big risk factor, it might actually be a little bit overbought by now. And on-chain indicators suggest that the Bitcoin market is now high risk. But without the giant FTX sell-off, and a sell-off right now would actually probably be back in the 45K, maybe 44K, not the 38K. And basically us like readjusting from there would go even higher next time, as long as the Genesis and the Genesis stuff doesn't appear first and the Gemini stuff doesn't appear first. We don't really know how big that fine is going to be. The judge is yet to determine those things. The New York AG is expanding that case, but that's going to take several months. So the imminent thing is the $1.4 billion dump. And if that happens, like we'll go back into the lower 40,000s, and it'll probably take a couple of weeks for us to actually recover from that. And then the Gemini thing is like still way, way, way out in the future. That's just something that we have to look at. But these lawsuits do not take short amounts of time. Whereas like liquidations that have already been determined, they usually come decently fast. So even though like right now it's a high risk zone, and it's high risk zone, I mean, on the on-chain indicators, which is more of like, just looking at the inflows and outflows on chain, and also because of the legal stuff. But I don't think the risk for a big dump is really all that much. The risk for a small dump is definitely there. So like the last note is saying, after challenging a recovery since the FTX collapse, this indicator has advanced to 2.06, entering the high risk regime. These levels are typically seen during the early stages of bull markets, as long-term investors return to a relatively meaningful level of profitability. And some of them will actually take profits, but I think at this point, a lot of people are waiting for the bull run, and those people are probably going to hang on. I think long-term wise, Bitcoin trend is definitely still way, way up. But there could be like a little bit of outflow right now. I'm not too worried. I still think I'm still very bullish for next week. I'm still hoping we bust through 50K next week. People have been suggesting a resistance around 48K. We're like above 48K most of the time, but we haven't broken solidly above 48K. But I think 50 is where the big net is. Obviously, there wasn't that much activity over Sunday, but we'll have to see when the market actually opens right now. And I think people are getting more. People are actually getting more and more confident in the economy right now. So they are willing to bet more and more on these on risky investments. And I think that's also part of the reason that we're actually going up right now, in addition to the ETF. But the ETF inflows are still very, very massive. On another note, in inflation-torn Argentina, locals are using crypto caves. This is from Cointelegraph, but not in the way you expected. They're actually avoiding Bitcoin. And no, they're not using XRP or anything else. They are actually using these secret crypto cafes to actually trade stablecoins. Remember, the Argentinian president, even though he's pro-crypto, wants to use the US dollar as the actual official currency. So yeah, you BRICS folks, the US dollar isn't going anywhere. Everyone is still adopting the US dollar. So crypto caves are underground peer-to-peer exchanges operating secretly and tucked away in non-visible places. Crypto Markets strategic alliance manager Guillermo Escuerdo told Cointelegraph, it's not a normal commercial place with public attention. They are hidden places where one goes with prior confirmation to meet and change their local fiat against cryptocurrencies, mostly USDT. So they're actually using Tether. So other governments outside the United States might actually have a reason to go after USDT because they're not getting tax revenue either. And they are saying that locals can get a far better rate than the official exchange rate if they use such crypto caves. Not really sure how that actually works. The official exchange rate for Argentina is probably like really, really poor because their peso is like really devalued. But in crypto cafes, you might be able to trade less Local banks cannot officially accept dollars, so crypto wallets have become popular to store dollar peg stablecoins like Tether. So like they're basically just going around the entire banking system right now. So I live in Argentina. So this guy's Rich Kane. He's saying I lived in Argentina. This is on Twitter. This guy Rich Kane says I lived in Argentina for 14 to 17, where I had to go to a cave each month to illegally sell my pesos to buy USDs. So just so I could guarantee a flight home each year. I think this is like a U.S. citizen saying this. Anyone who doesn't understand why crypto DeFi is revolutionary is living under a rock. So this is like saying like he likes the blockchain crypto stuff, but not really because of Bitcoin, but because of the exchanges and because he can actually use the peso to actually exchange for stablecoins. So stablecoins, not so much Bitcoin, are getting bigger and bigger in Argentina, and they're going to play a big role in the economy. Not exactly what we want to hear, because we want people to use Bitcoin, obviously, but they are still using the stablecoin technology, blockchain technology, and using stablecoins. I think that will make some countries way more friendly towards stablecoins. So basically, they're using these Argentinian pesos to convert to stablecoins to convert to US dollars. So this is how blockchain and like networks like Solana, networks like Tron can definitely help convert money. They're not using Ethereum because Ethereum is too expensive, but like they can use other networks now because USDT is multi-chain. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.